Good afternoon, everybody. Welcome. Welcome to the market close. Oh boy, what a week. Things just never seem to calm down. We got chaos south of the border, as usual, but we got some other interesting stuff. We've got a potential, we still have the potential trade deal that's being worked on between Canada and the United States, which could be interesting. We also have a potential deal. It's more than a potential deal. It just needs to be signed, from what I understand, between the United States and China. So that could be interesting. Absolutely. At the same time, we got chaos in Los Angeles as we got troops on the ground. Uh, we got the National Guard. We got Marines. We got a little bit of everything. We got a little bit of a war brewing between Donald Trump and Gavin Newsom. Gavin Newsom. Newsom. I gotta say it right. Gotta be very careful. Because you guys probably have heard Donald Trump has his own word. He likes to slur Newsom's last name. And I'm trying not to accidentally do that. But nonetheless, we got a lot to talk about. We also got a market. So, without any further ado, let's jump in. We do have a green day in Canada. We got a green day in Canada, not so much in the United States, but looking at the TSX right now, it is 0.47 to the green. This has been a great month. This has been a pretty good month. Like, look at this blue line. This is us. We are well above that blue line. In fact, we're 4.32% up above that line. That's not too shabby. I'm liking it. Now, oh boy, we start to look south of the border. Not having the best day. The S&P 500 is down 0.38%. They're still looking good on the month. But obviously, a lot of this Los Angeles stuff, a lot of the words going back and forth between Trump and Newsom, those it's kind of making the market a little bit leery. Matter of fact, even the news of China has not alleviated it yet. So we do have red going on in the States. The NASDAQ, a little bit harder hit, a 0.54% down. Dow Jones is almost flat. It's only 0.07% down. Russell down a big 0.64%. But on the bright side, this is what happens when the U.S. markets are struggling. Gold starts picking up some steam. So gold up 0.72%. Silver's down, though. Silver is down 0.95%. WTI having a strong day. West Texas Intermediate up a full 4.82%. So if today's the day you decided to start playing with an inverse oil ETF, boy, did you pick the wrong day. Crypto down a little bit. Bitcoin a full 1.48%. Ethereum down 0.35%. Heading into, Topicus.com, they're down. Looking at the heat maps, we got a lot of stuff on the heat maps. One of the things you'll notice right away here is look at Dollarama, up 9.8%. Well, Dollarama had their earnings today, and let's just say, can I go directly? I don't know if I can go directly to Dollarama from in here. I don't think I can, but we backtrack here. Let's head over to Dollarama here. You can see the candle. Oh boy, a god candle, almost. Perhaps maybe a demigod candle, but they had fantastic. Look at these earnings. So their earnings came in 17.48% over estimates. So that's not too shabby. The revenue also came in 1.39% above. Now, I know we looked at this on the weekend, and I said I think they're going to have a good earnings. So, in one of the accounts, not the challenge account, I did put a little bit on on them, yesterday, and not bad, not bad. Now, mind you, I did make one error. That error is around here, in about halfway up, that's when I pulled the trigger on the sale because I thought it was going to go up and then start coming back down, but I pulled a bit too early. I did pull a bit too early. Still not bad. Made some profits. And here's the thing: when you leave the table with more money than you sat down, there's nothing too shabby about that. Nothing too shabby at all. I probably, quite literally, if I'd stayed in another half an hour, I would have doubled. I would have doubled the profits on that trade, but nonetheless, I'm not disappointed. Not at all. Not at all. So, those any of you who did make a Dollarama play, congratulations. It was a good play. It was a good play for sure. All right, now let's get back. We'll get back here. Get back here to the chart. So energy looking pretty good today. Obviously, with WTI on a tear, you can see CNQ, Canadian Natural Resources, up 1.82, Imperial Oil up 2.94, Cenovus up 2.06, Torlamine up 2.41, Suncor. It doesn't stop. That's the strength in the market. And in fact, without the strength in oil today, the TSX would be in a red market. So that's what's powering it. It is, well, that plus Dollarama. Dollarama is helping as well. But I mean, look at the retail sector. Loblaws down, George Weston down, Alimentation Couche-Tard down. Yeah, so really, oil and Dollarama pushing everything up. Everything else pretty darnish, pretty darn red. Looking at the United States, oh boy, let me refresh that because those reds look a bit muted. There we go, a little bit better. Yeah, look at this. We got a lot of red. You got Nvidia down, Apple down full 2%. Now, Apple introduced yesterday, they introduced all of their new software, and I liked what I saw, but I know a lot of people were underwhelmed. And that's not good for Apple. Not good at all. They've kind of really stumbled quite a bit with the whole Apple Intelligence. So things Apple needs some wins. Walmart down, Amazon down. Broadcom, though, there's a little oasis here. Broadcom up a 3.12%. All right, heading on over to crypto, and holy banana bread, I'll refresh this too. If my colors get dull, just refresh it, and bang, we are up. All right. Looking at this here, they've got Ethereum up 1.58, Bitcoin down 0.73. Yeah, it's kind of interesting. Now, you'll notice a discrepancy here. They're showing Ethereum up 1.58, but when we're looking here on our main chart over here, we got Ethereum down 0.19, and it's just where they start the day. I believe they're using different time zones between the two, and that's why we get a little bit of a discrepancy. So nonetheless, let's see here. Where am I? Oh, I was over here on. Nonetheless, Ethereum didn't have that bad of a day, so I'm liking it. All right. There's about 15,000 different cryptos out there, and oh boy, I like to, at this point in this stage, Bitcoin is in the red. Let's just grab some random crap coin that's in the green and see what we get. Let's go with this one. Or this one. Yeah, what is this one? Hello, come on. Oh, there we go. GPT Plus. So obviously, this one's probably trying to capitalize off of AI. But I gotta say, it's worth 0.000009. It's worth next to nothing. I'll never own this. I like ChatGPT, but I don't like GPT Plus, the coin. I don't have any faith in it. I have very little faith in crap coins, so I'm going to put it out there. It is easy to get seduced by crypto, but here's the thing: be careful if you're playing with the crap coins. You guys know I also don't like penny stocks, so these are even worse than penny stocks. So a good chance you can get wrecked in here. So be careful. You can make money in crypto, no doubt about it, but stick to the big boys. Stick to your Bitcoin, your Ethereum, your XRP, and gosh darn, even your Dogecoin at this point. They all tend to be good. They all tend to be good. All right. It is time to get to the chat. We also have the bell coming up here in about a little over 4 minutes. A little over 4 minutes. All right. Stan in the house first with a good day all. And Mario saying, good afternoon, everyone. Muggsy, a sad situation for our American friends. It's craziness. It is absolutely crazy. I don't know what's going on. I don't know. Roku in Stittsville says, hello all. So Wealthsimple will be having, we'll have banking at the end of the month. Nice. Yeah, I saw, I think I had an email from them about some event. I don't know if it was today. I wasn't available to check it out. So that must be what we're talking about. This is cool. Yeah. You know, that's going to be very interesting to see if Wealthsimple starts to, well, if they sort of become moving into the EQ bank space, that would be really, really interesting. Maybe they'll do better than EQ, and I love EQ Bank. We'll have to see. I need more information on it, though. Ricardo says the problem in the U.S. was the bonds at 1 p.m. Things turned ugly quick. Yeah, absolutely. That was another really bad catalyst for sure. Larry says crude oil up, UCO up, what 50%ish. I'm back into my Tesla short. I expect a dive. Interesting. It could be an interesting week for sure. I thought I saw some footage of that first self-driving taxi, but we got to see. I don't know when it's. Is it the 22nd, Larry? Is it the 22nd or the 21st, or the 22nd that actually goes live? I'm not fully sure. Rory says, hi there. Nope, didn't touch HOD. Good. I'm glad to hear that. Ricardo says, I'm in a nutty squeeze on a random penny stock. So let's see. Larry and Rory, I got in NCNA May 29th at 4 cents, and we're at 0.16. Oh, interesting. Yeah, some of these moves can be very, very interesting for sure. Larry says, I'm only bullish on crude 2X ETF. Everything else is bear. ETFs, especially Tesla again. Let's see. Ricardo, are you getting out of that penny run? I would. All right. Jersky says, hello. Good afternoon, everyone. Hey, Jersky. Good to see you. All right. Let's see here. Ricardo's talking more about that penny stock move. It was a random play with some premium I sold on uranium, so I figured why not? Since premium received is not real money. There we go. Nothing like having a little bit of play money. There's nothing like it. That's for sure. All right. Larry says, let's see. The bulls think there will be 1 million robo-taxis on the road next year, which is impossible when the Austin factory doesn't even make 5K model years a week and 2 12-hour shifts Monday to Friday. Yeah, we'll never have that many robo-taxis on the road. I think this will be a slower rollout than a lot of people think. But we'll see. We'll see how it goes. All right. Here we go. Whoops. I just accidentally scrolled a bit further down. All right. Let's see. Is Canada going to have expedited permits for mining for uranium and precious metals too, like the U.S.? Or is that not happening with the new PM? This is a good question. So with the new One Canada economy bill, now it has to be passed, but if a new, let's say you want a uranium mine, if it's deemed to be in the Canadian national interest, they will shorten all of the red tape that comes with getting that mine approved and getting it going down to about 2 years. So it'll still take some time. But in the past, if you wanted a brand new mine, you could be working, you could be looking at 15 years before you break ground. It's crazy. So yes, if it's deemed in the national interest, and I can't see why it would not. I mean, uranium is going to be huge, absolutely huge. So as far as I'm concerned, that's a big money maker. Just as big as oil, just as big as oil. I think uranium will make us a lot of money, and we get some of the best uranium in Saskatchewan. So you gotta love it. Cameco, another big Canadian company that has a lot of that Saskatchewan uranium. So definitely cool. Oh, guys, it's time for the bell. Here we go. Ooh, I was late. I was about 30 seconds late, but that's what happens. That happens. That's fine. Yeah, it's only when I'm like a minute late, or I'm so late that everybody in the chat is showing me pictures of bells. I think we're good. I think we're good. All right. Larry says, is especially impossible when there is no expanded area to paint the cars. Let's see, paint runs at approximately one car every 30 to 50 seconds. Okay. Interesting. Now, I have noticed that my Nightbot is not posting the Friday stream thing. So I'm going to I'm gonna just refresh the Nightbot and see what's going on there. I'm not sure, but anyway, guys, if you do want a Friday stream, it's just you guys know the lowdown for supers or gifted subs or whatever, and that will secure that stream. All right. See, I shouldn't have to say it because the Nightbot's supposed to do it. I don't know why. I've got it turned on. You know what? I'm gonna turn it off and turn it back on. There we go. We'll see if that has fixed the Nightbot. All right. Larry says, model-wise, Cybertrucks and robotaxis all move through paint on the same lines. Yeah. Now, guys, those of you who don't know, Larry used to work at Tesla. So Larry's got the inside scoop on a lot of what's going on down there in Texas. All right. Waymo pulled back their taxis at LA once 3 cars got turned into ashes. Yeah, that's crazy. So guys, if you don't know what happened, some of the protesters called for a Waymo to get the car there so that they could do their thing to it. So yeah, it's kind of crazy stuff. Now, I will point out though, in all fairness, when you look at the news, they show you the area where the riots happen. They show you that area where the chaos is. Quite literally, you can go a couple blocks away from it, and it's business as normal. It looks like a regular, normal day. So it's not the whole city. I know sometimes when Trump is talking about it, he makes it sound like, like the entire city is in a revolution or something. It's not that bad. It's just those areas. But the fact that we got an overreaction from the White House, that's a little bit concerning. That's a little bit concerning, and it got pretty bad. I mean, at one point, Trump even suggested that if Gavin gets in the way, so Gavin Newsom gets in the way of of any of the military or any of the federal employees type thing, that he should be arrested. So that's just craziness. It's absolute craziness down there in Los Angeles. But it's not the whole city. It's very isolated. It's very isolated. So just keep that in mind. I don't want people to get that whole impression that it's like something out of like Escape from Los Angeles or something. Rory says, Larry, that's what I do. Fundamentals on companies. TA trading is only a small percentage when entering a position. Jack is in the house with a good afternoon. All right. Port looking hot today. Port. I'm not sure what you're talking about, Jack. Let me know. Let me know what port is. Or are you talking about your portfolio? Is that your portfolio you're talking about? Maybe. Rory says, oh, snap, the like button. Got to hit it before Mary gets here. Oh, yeah. Now that you've mentioned it, let's do it. Let's hit that like button, folks. Let's see. I sold out early on my penny Chinese micro cap stock today. Interesting. Oh, I do see the night bot. The night bot. I guess it worked. Turning it on and off. It's the number one rule of troubleshooting things, right? Turn it on. Turn it off. Turn it on. And that's the number one way. And amazingly, some people will be like, "Oh my God, you're a genius." And it's like, seriously, just, something doesn't work. You turn it off, you turn it on. It's so simple. But I've seen things. I actually, it's funny. Years ago, I worked. I did a little bit of tech support at Compaq, and I don't know if you guys remember Compaq. They no longer really exist. They were bought by HP, but some of the calls, I quite literally, tangent time. I took a call one day, and this woman was on the phone, and I was, she was complaining. She was like, my computer's not working. It's not powering up. I don't know what's wrong with it. So I was like, okay, let's start with the basics. Let's check the cabling, make sure everything's plugged in. And so I'm like, she's like, oh, but that's under the desk. I'm like, yeah. I said, well, just humor me. Sometimes your foot may have kicked it or hit the power bar or something. And she was like, well, it's really dark down there. I was like, okay. Well, I said, you got lights in your office? And she's like, no, those aren't working right now because the power's out. I'm like, what? And I said, and you really thought? Did you think your computer didn't use power? At that point, she just said, oh, it dawned on her that she was being less than intelligent at that moment. Well, she was having a brain fart. But it was funny. Anyway, you'd be surprised. Some of those calls, if you've ever seen some of the crazy calls that you'll get compilations of them on the internet, they happen. They actually do happen. So, oh gosh. All right. Andre says, let's see, can you tell me how to buy 7AIX7 token on presale? They write that BTC will fall, 7A1X7 will rise. Yeah, I don't know. I have no clue what the token is, Andre. No idea. Unfortunately, I can't help you with that. At all. All right. Let's see. Oil looks hot. Oil's having a fantastic day. And there's the Nightbot. Woohoo! Nightbot's working. All right, Andrew. I sold a big chunk of my EQB and bought, CSU, MEQ, ATD, LMN, and a smidgen of DOL. Well, it's too bad, Andrew, you didn't buy the DOL yesterday, because you would have got a nice return already. Let's see. Thoughts on a Northwest company. Started a small position today, minus 5%. Let's take a look. I haven't looked at them in a long time. Let's pull up here. Northwest. All right. We need to actually get to. Here we go. This one here, Northwest. All right. Northwest company. So let's take a look and see. Oh yeah, they have a little bit of a retracement here. I always let's just go to our bigger picture, and you can sort of get an idea. One of the reasons I like to start at like the 3-year or even the 5-year sometimes is I get a general consensus of the overall trend of the company. So overall, there's been a few little things, a few little drops. Like, let's go to the 5 years. I want to see. All right, here we go. Oh, guys, I gotta go to the 10-year now to see the COVID drop. Can you believe it? Oh wow, it's it's getting back there. It's back there now. The 5, because we're past March. So, but yeah, since COVID, they've mostly been on their way up. Now, there's been, and you'll see this everywhere. I've seen this a lot with this bear market, with this bull market. There's been kind of like, everything's moving at a nice relative pace. And then we've had this bigger bulge coming up. And Sometimes that can be worrying. It may not be, but sometimes that can be worrying because obviously, if we do drop into a bear market, if we're overinflated, that could make the drop a little bit bigger. Just saying, I'm not saying it's going to happen, but that's one of those things. Like I've been noticing this trend like this, and I'm like, okay, let's pay attention. We'll pay attention. I mean, we'll definitely get some signs as things start to hit the fan. But I think we're fine. We're fine for the moment. I think we're fine for the summer. Yeah, we'll reevaluate that in the fall, though, for sure. Oh, wait a minute. Let's actually finish looking at Northwest Company. So overall, yes, the fact that they have a little bit of rotation, that's normal. Like, look, they had that was Trump and his Liberation Day or whatever he was calling it. So, yeah, a little bit of a retracement after a big jump like that. Completely normal. It happens all the time. All right, now taking a look here. Let's see, PE ratio, earnings per share. Oh, that's looking good. That's looking good. I mean, they don't have their dividend's not huge, but this is going to be more of a growth component. But let's take a look and see how they're doing. Mostly debt is what I'm interested in right now. 55%. That's not too shabby. That's not too bad. So yeah, their debt to equity is not that bad. Their return on equity is up at 18.85. So yeah, I don't really have a lot of complaints with Northwest Company at this point in time. So yeah, I think they're fine. All right, let's pull back here. Let's see. Ricardo says, I was reading an article that DNN Denison Mines is one of the biggest, shortest stocks. That's a big player in Canada besides Cameco. Small price for a good company. DNN Denison. I have not looked at them in a while. Let's do that. Well, let's jump back in. DNN. Here we go. Denison Mines. Excuse me. All right, here we go. And this here is on the U.S. Stock Exchange. 163. This is, I thought we had a Canadian version of this because I'm like, I know I've seen Denison before, but I wasn't expecting a penny stock. So I might be thinking of a different company. $1.63, so it's definitely penny adjacent. All right, I don't seem to have much information here. This may be one of these ones where I don't have a lot of information. You know what? I know I'm not going to have. Let's go to Yahoo. We'll just go to Yahoo. Sometimes Yahoo has a little bit more data when it comes to a small U.S. stock. Here we go. Let's pull this up. All right. Perfect. This is what down here, this is what I'm looking for. I'm looking for this. That, of course, scares me. A negative return on equity, negative 20%. Oh, boy. Their return on assets also negative. They don't have any profit because they're not profitable. They're not profitable at the moment. Yeah, I don't think they have any debt, though. It doesn't look like they have any debt, but I mean, if you remain unprofitable, you'll start to take on debt soon enough. So I would want to, with something like Denison's Mine, I would really want to actually do a lot more research before I would drop money on them. So, because initially, and keep in mind, we mentioned earlier about all of the red tape and setting up a mine. So, maybe Denison is at that point where they haven't even broken the ground yet. Maybe they're still in there trying to figure things out. So that could be what's going on with them. Hard to say. All right. Larry, let's get back here. I like Tesla long-term, but always buy the hype, then short the event date. Yeah, absolutely. It's kind of a big thing. All right. And Denison. All right. Jack says up 16% on Synovus since April 28th. Should I take profit after ex-dividend day Friday? Here's the thing. I'm gonna point this out. So when you get onto the ex-dividend day, yes, you've secured the dividend, but usually, because all of the amount for those dividends are then removed out of the market cap, so you do fall. Mind you, if the market's healthy on that day, Later in the day, Synovus will make up some of that, hopefully, if the market's healthy. Now, if the market's not healthy, so for example, if we're in a falling oil situation on their ex-dividend day, then you could have a bigger fall than normal on that day. So if it's one of those interesting things, it's like I would sort of look at the headwinds going into ex-dividend day to sort of decide on whether I want to grab my profits before that price goes down, or see if that price is going to recover over the next couple of days. Now, I believe Synovus is quarterly, so a quarterly dividend payer tends to take a little bit longer to recover than a monthly, just for the simple reason that it's 4 times the dividend size is what a monthly company would be. So just something to keep in mind. But also, and here's this other thing, I'll throw it out there too. Even though that ex-dividend day is coming up, and if you're well in the profit right now, sometimes it's like, do I take a gamble and maybe lose some of that profit? So sometimes taking the safe way, going conservative in a case like that is not a bad idea, but it's up to you. Now, keep in mind too, with Synovus, here's the thing. If you decide to wait ex-dividend day, so you get your dividends, and it doesn't recover those dividends, you can always abort selling. You can always hold on to them for a little bit longer. Maybe it takes a week to get that, to get the dividends back. And that's fine. That's fine. Patience is not a bad thing when it comes to investing. A lot of times when you make rash moves, that's when you tend to leave more money on the table than you should have. All right, Andrew, yes, unplug, then plug it back in. Exactly. Or have coffee. Oh gosh, that's so good. Coffee fixes everything. If you cannot afford Cameco, Denison is the next best thing. Yeah, and this is the thing too. I mean, Denison right now, yeah, they're rough. The financials don't look great. Hence why I say do more research on them. Find out what's going on. Find out what they're doing. Find out, if they're on the, for example, if they're like let's say that, and I don't know whether Denison has broken ground or not. So this is me speaking from not knowing. But let's say that they're at that point where they're just getting ready to finally start pulling uranium out of the ground. Well, their financials might be at their worst, and they might be about to turn around big time, especially if uranium market is doing pretty well. So that's something to keep in mind. All right. Let's see. They missed revenue, but EPS still increased. Yeah, that can happen. That can definitely happen. And really, it comes down to, a lot of times it will come down to investors, right? So you can, I would say for the most part, investors care a lot more about the earnings per share, about the EPS than the revenue. Not all the time, but in a lot of cases, you can have green on the top, red on the bottom. So EPS in the green, revenue a little bit in the red, and they can still be very positive for the stock. But keep in mind too, those are just two data points. So with an earnings also comes you also have a report. Like, you basically release a report that has a lot of your forward guidance in there. And sometimes if that forward guidance is fantastic, I've seen situations where you missed on earnings, you missed on revenue, but holy banana bread, you had some great stuff in what you're planning to do and some of your outlooks for the future. And I've seen stocks go up based on that power of that alone. So it is kind of an interesting thing when you're looking at, what's going to go on, what's going to happen. Like even with Dollarama, for example, coming into these earnings, it looked great. Their chart looked great for that time period. They had a lot of movement to the upside. Heck, let's actually pull the chart up. Dollarama, let's see here. All right, DOL. All right, perfect. Look at that. I love this. I love this. But all right, let's just come back to 6 months. All right. So this here, this quarter, basically in here is what we're looking at. It was a no-brainer. They're going to do well. Now, here's the question though. And this is a question. Just because they went up doesn't mean they beat expectations. It certainly helps, but let's say, for example, all of the analysts thought they were going to go up even faster than what they did. So you can go up and you can miss expectations because sometimes expectations get a little bit wonky. Sometimes people demand too much. So you can't use this. You can't sort of look and say, oh, they went up during that period. Great. Everything's going to be in the green. They're going to explode with their earnings. I'm fantastic. Don't get into that mindset. Don't get into that mindset. What you want to do is you want to look ahead of time and see what they're forecasting. What the overall feel is for the company. Does the company feel like they're going to hit their targets? Has their targets been revised? All kinds of little pieces of data that you can pull in when you're looking for that perfect opportunity to come in. Now, in the case of Dollarama, they had stronger than expected growth. Also, the craziness of the tariffs. Easily pushed more business their way as people were a little bit more unsure. People were like, I don't know what's going to happen. I don't know if I'm going to have my job this time next month. Let's start cutting back money. Let's start buying from the Dollarama. Walmart's too expensive. We're going to Dollarama. And for some reason, when I said that in the back of my head, I was thinking of the Spatula City commercial. Anybody, if you've never seen the Spatula City commercial, just Google it. I think it comes out of Weird Al's movie UHF, but it's a funny little commercial and it gets stuck in your head. All right, let's see here. Jack says I bought in at 51.20. Nice. Andrew bought a ton last month. NWC. I think that's what we were talking about there. All right. Finbar says, what's your thoughts on WSP? I've never heard of it until a friend told me it's a company he works for. WSP. It's a good play in the energy sector. So at least I think it is. I was actually thinking of something completely different, but WSP Global. All right. Let's see here. Interesting. No, this is not what I was thinking of. I was thinking something else, Finbar, but I'm liking what I'm seeing here. So WSP Global, let's see here. Let's see. Engineering and design services for transportation and infrastructure. Loving that part right away. You said the key magic word, infrastructure. I'm on board. And they've got, let's see. They got 4 segments. So Canada, the Americas, let's see, Europe, Middle East, India. So they're everywhere. That's fantastic. You got geographical diversification. I'm loving it. Let's see here. Healthy earnings. Loving that. Small dividend. That's fine. This is a growth company. All right. Let's hit the back end. All right. And here's what I am looking at. Debt to equity, 67%. Not too shabby. Their return on equity, 8.46. I'd love to see that a little higher, but it's not bad. 3.52 return on assets. So yeah, not bad at all. I want one more thing here. Let's back out. And take a look. That's a pretty healthy trend. They've had a good upward trend, and we're going to go back 5 years. Actually, we're now going to go back 10 years if I want to see from the pandemic. So there's that little pandemic spike, and yeah, pretty good. There's the bear market right in there, and then look at this. This is just fantastic. I'm loving this. Yeah, not too shabby. All right, and you guys were talking about Mary earlier. Here she is. It's time. It is time to hit the like button. So if you haven't done it, as you guys know, Mary is the official captain of the like button. So If you don't want Mary on your case, you got to hit that button. I'm going to have a sip while you guys are doing that. Let's see. Jack says, what made DNN shoot up before the '08 recession? That's a good question. That's a really good question. Let's take a look at this shoot. First of all, no, I don't want to see the Lego Krusty Burger. All right. Let's take a look here. All right. I didn't even go back far enough. All right, let's go all the way back 20 years. All right. So are you thinking that you're thinking of this little bump back here, Jack? I get no idea. That would be something. That would be something to. You know what? I wonder. Let me I'm going to ask ChatGPT, see if they have an answer, because I do not know. Let's see. All right. And it's fun. And I always say, take a grain of salt if you get some information from from something like ChatGPT or any of the others. Just double check it, but it gives you an area to start to look at. One of the things that I do like with ChatGPT is they will usually give you their sources. So let's see here. Now they're saying, take this with a grain of salt, Jack. ChatGPT is saying that there was some aggressive monetary stimulus, so low rates as well as quantitative easing, and everything rally that included oil, gold, and uranium. So small cap stocks did really, really well during that time. So according to ChatGPT. Now, one of the things that I'm really cautious about with this answer is that the ChatGPT did not give me their source. I always question things if I don't get a source, but it makes sense. But once again, I would say just take it with a grain of salt. I mean, yeah, everything that ChatGPT said sounds legitimate to me. It sounds, I believe it. I believe the chat. But I would still caution you, double check it. What I do like is when ChatGPT comes and gives me the source so that I can see their answer and then I can go to the source and dig deeper. That's what I like. All right. Larry says, wondering if we have a traditional September-October drop. So preparing now. Oh, that's a really good question. It's a really, really, really good question. It's kind of one of these things like, this has been a year where I think the normal stock market rules. So normally June, July tend to be slower. They tend to be slow. August used to be slow, but the last 5 years or so, we've started to see that the fall pick up in August. And then the fall, oh boy, the fall could go either way. September is one of the worst months. Now, when I say it's one of the worst months, there's a bit of a myth to it. Part of the reason that September is one of the worst months is that some of the biggest, baddest market catalysts have happened in September. I'll give you 2 examples and tell me if these are not big catalysts. 2008 financial crisis, the crash. When did it happen? September. 9/11. When did it happen? September. So we've had some really big things that happened in September that have helped scoot the data down a little bit. Is September a bad month? It can be, obviously. Now, mind you, I wonder if the pandemic has skewed March down a little bit. Just now that just popped into my head as I'm thinking about it. But so it'll be interesting to see. I'm gonna remain open. I'm gonna remain very open-minded. I think I think we're going to see a green summer, but a red September, I think. But oh boy, like I said, this year, anything can happen. I mean, if you told me, heck, even if you told me in March that the Marines were going to be marching on parts of Los Angeles, I'd be like, yeah, no way. Come on, forget it. So what can I say? Jack says, my biggest regret in life was being 6 years old during the '08 recession. Oh, okay. If that's your biggest regret in life, you that's not too bad. That's not bad. Jersky says, my uranium play is Saskatchewan. Yeah, absolutely. The uranium in Saskatchewan is actually some of the best uranium in the world because it all has to do with the different isotopes of uranium. So because uranium, you can have some uranium that has a little bit of extra punch inside isotope wise, meaning they've got like some extra or not electrons, but extra neutrons in them that change the atomic number slightly. And that's one of the reasons, like the uranium that comes out of Saskatchewan is some of the most coveted in the world. So that's not too shabby at all. Good on you, Saskatchewan, for making the best uranium. Brian says, good afternoon, everyone. Hey, Brian. Denison Mines is in northern Saskatchewan. Yeah, there we go. More Saskatchewan. I love it. Ricardo. Oh, you can look it up by their Canadian one. DML is on in the TSX. Okay. Let's take a look at the Canadian one then. DML. All right. Denison Mines. Here we go. Here's the Canadian version. All right, let's just pull up. I'm gonna pull up the 3-year. Oh yeah, this is looking a little healthier. It is looking a little healthier. I still don't have much data, but sometimes small companies, sometimes they don't always have all of the data I'd like to see. I'm gonna see if I have anything. I do have it in here. Yeah, look at this. You can see it's pretty much what's the same. It is the same. I'm not seeing any debt, but like I said before, there was no debt on the US one. So when you do look at a company, so like Denison Mines, so in this case here, DML on the TSX, DNN on the New York Stock Exchange, it's still the same company, right? And you'll notice that these numbers were the same. The return on equity, negative 20.03 on both. So there really isn't a difference between the two, other than, it's the same company, but one of their tickers is on the New York Stock Exchange opposed to the TSX. All right. Joe is in the house with a good afternoon, everyone. And the Nightbot's back. Gotta love the Nightbot. All right. Jack says, definitely I can't just plan it now, but I'm heavily considering selling my initial investment and playing with house money. Oh boy, Jack, I'm not sure what you're talking about. I always say, always be sure to take the time to think through things, because I know, I remember back in 2021. Now, this is a completely different situation, but there were investors who were like, oh my God, I could be making so much money on Bitcoin. Why am I even bothering in stocks? I'm just going to sell everything and put it into Bitcoin. There were people that did that in November 2021. And by the end of the month, Bitcoin went into crypto winter. It went from a high in the 60,000s. Well, it went all the way down to, around 20,000. Like, it did wick down, I think, to 18,000. But a lot of those people who sold all their stocks to go into Bitcoin come full time, a lot of those same people, they're no longer investing. They took serious losses, and they're just like, oh my God, I can't believe it. I can't win. I'm out of here. And that happened to a lot of people. Unfortunately, it's one of the worst things with the pandemic is that because at the end of the pandemic, we all, there was so much extra money. The government was paying people to stay home. And a lot of that money made it into the stock market. So that bear market that followed the pandemic was that bull market was pretty strong. And then when we did go into the bull market, at the end of 2021, as the supports had dried up, a lot of those people who were buying things at all-time highs, and all of a sudden we went into a bear market. A lot of them panicked, sold, and have a bad taste of investing in their mouth. And it's one of those things. It's one of those things. Like, how do you fix that? How do you fix that? One of the best ways to fix it is to sort of start when you're new to investing. Start right away. Coming up with a plan. Like, okay, if you make a plan ahead of time, what happens if things start to fall? How am I going to react? How far can I expect things to fall in worst case scenarios? If you have, whoa, sorry, I I hit the desk and it made everything shake. It's not an earthquake, I promise you. If you have a plan, then you're not going to overreact. You know what you're going to do. It's like, okay, I know what I'm going to do in this situation, in this scenario. I'm going to hold tight because these have good fundamentals. They're going to rebound on the other side. I'm fine. In fact, I'm going to take some of the new money coming in and I'm going to average some of these down. Great plan. Your plan should never be, oh my God, I think it's going to zero. I'm going to sell and get out while I still have pants. That's never the plan. That should never be the plan. Now, if you're in a company that you got in because it was more speculative and their fundamentals not super great, and then we go into a bear market and they're falling big time, that might be one. That might be a situation where you might be like, I gotta get out. That might be a good situation, but you got to sort of decide for yourselves. As long as you're happy with the company's fundamentals, as long as their whole sector. So, for example, if you got into a bank and all the banks are falling, that's fine. Now, if you got into a bank and that's the only bank falling, then there's an issue. There might be something else going on there, and you probably want to pull out your detective hat and dig a bit deeper just to find out what's going on. All right, Larry says, the only thing I like about dictatorships is the ability to cut through the red tape of advancing society industry-wise. That's true. That's true, unfortunately. Speaking not really of red tape per se, but I did mention there's more talk today about the Canada-US potential deal. Apparently, it's still being worked on. There really wasn't anything new that came out today on it, other than kind of it might be closer than we think, but we're not entirely sure where it is. But the US-China deal, we did get a little bit of information on this. So basically, the US is going to receive magnets and rare earth minerals from China. And in exchange, so for that, the US will allow Chinese students to attend American universities, which will reverse some of these recent restrictions, which is great. Because, that's a lot of universities. Most of their money is made from their foreign students. So it's good to see that. Now, in regards to the tariffs, so the U.S. tariffs on Chinese goods are going to rise. Right now, I think they're sitting at 30%. They're going up to 55%. China is going to keep a 10% tariff on the U.S. And Trump likes this. He says it balances things. So he's definitely happy about it. So the deal, apparently it was finalized in London after a couple of days of talks. And right now, all that is left to happen is signature. So Trump and President Xi need to sign it, and then that'll be a done deal. That'll be a done deal. We'll see. This is Trump's administration. Anything could probably derail this before we get the signatures. Who knows? But nonetheless, that's kind of that deal. I wanted to make sure I mentioned it, because sometimes I'll put something in the title of a market close and I never talk about it. I'm like, no, I got to make sure I get that. Yeah, I get that done. Larry says, I think if things happen now, I think we could seriously see Tesla at $50. That's if Toyota dominates like I think they will in BEV. Well, the interesting thing with Tesla, too, is I don't know if you guys noticed this, but Elon came out hitting strong. And then most of his more controversial tweets, he's deleted. And apparently, he even called, I think he called Donald Trump, and I don't know if he gave like a kind of an apology, but we'll have to see how that's going to evolve. One of the things about Donald Trump is that you can be his enemy and then turn to his friend very quickly, or be his friend and turn to his enemy pretty quickly. So maybe there's a way out of this I think it's a situation where I think Elon realizes that the US could make things very, well, not the US per se, Trump could make things very difficult for a lot of his companies. So most of his companies, SpaceX, Starlink, Tesla, they rely on a lot of money from the U.S. government. So, in a way, I think Trump has him exactly where he wants to. All right. Let's see. Ricardo says, I remember seeing a roundtable of all automakers and the little Toyota guy saying how hybrid is the solution because of cost alone. 10 hybrid to 1 EV Toyota can do. Interesting. And a big player of uranium, and I am bullish on uranium, very, very bullish. Let's see. Oh yes, Ricardo, and Toyota sells over 3 million hybrids out of a total of 10 to 11 million cars sold yearly. Let's see. DNN is one of the few producers that was established prior to the Fukushima incident. Oh yes. Building a nuclear power plant in a place that's known for tsunamis and earthquakes. Not the best place. Unless you can come up with some kind of an earthquake tsunami proof situation. But still, yeah, nonetheless. All right. Let's see. But why was uranium so big right before the 2008 recession? It's not. I don't even know if it was directly uranium itself or if it was more or less all minerals. From the, I would have to do a lot more research, Jack, to get a general idea. Also, might be wise to sort of look at the overall uranium supply. So I know for one thing, before recently, uranium, the overall world supply was pretty strong. And being the fact that it was strong, it meant that uranium was listed for a lot cheaper because it was pretty plentiful on the market. But that has changed with a lot more of the emphasis on AI and on power and nuclear power. The uranium market now they've got a lot less stockpile. So that has helped. That has helped currently push up that price for sure. Yeah, exactly. Good old research. All right. And yeah, here's Ricardo talking. Uranium was big due to Japan initiating the nuclear energy as a solution to the land problems they had. So uranium was on the rise as a clean energy solution prior to that incident. Yeah, absolutely. Absolutely. Yeah. I mean, and that's the thing. Yeah, I'll definitely say that. It's been a while since I've done any deep uranium research, but I do remember. I remember this. So very cool. All right, and Jack's talking about maybe opening a small position. Now, here's the other thing too. I mean, there's a lot of good uranium ETFs out there, so that's another option too. If you're like, well, I don't know if I want to get Denison or Cameco, you could probably, get at least a little bit of both of them, perhaps. I would have to look at the portfolios of some of the uranium ETFs, but that's an option. Let's see. Look at the chart of uranium around the 85 to 87. When is uranium starting to grow and then peaking around the 90s due to the rise of clean energy? So let's see. Fukushima happened in 2011. There we go. All right. That's what I prefer about Google Gemini. It provides all the sources and you're already on Google. There we go. Yeah. Normally I do get the sources with ChatGPT if I ask it a question. This is one of the few times where I'm like surprised that it didn't give me the source. I'm like, what's going on here? Let's see here. Actually, it even has a note in here at the bottom on the Fukushima effect. Let's see. So Denison's post 208 alley ended abruptly in 2008 2011, sorry, after the Fukushima nuclear disaster. The event crushed uranium sediment for nearly a decade, a cautionary reminder that macro tailwinds can reverse suddenly in this sector. Okay, fair enough. I'm going to just throw in here. There we go. I just asked for the sources. I'm like, it's like, give me those sources. Give me those sources. All right. So part of it, apparently, ChatGPT got off of the denisonmines.com site. That's the only source that's the only source they gave me. That's the only source they gave me. Oh boy. But that's fine. There's a lot of information out there on uranium anyway. Rory says, I still remember watching that tsunami hit eastern Japan around the Sendai region. Scary event. Oh, absolutely. Let's see. That was devastating. Still praying for Japan. All right. Let's see. Burns is why in January 2024 it was bad for uranium because Japan had a tsunami again and people feared another meltdown. Yeah. Understandable. Let's see. Chernobyl happened in 1986. The night bought again. Ricardo, and remember, if uranium mines are not using that much acid to expose the ore, then the production of uranium will be low. There we go. A little bit of stuff in there on uranium, on the actual processing. I like it. I like it. Let's see, Ricardo. I'm long the Fukushima company, TEPCO. Let's see, TEPCO, 90 billion assets makes 20 billion. I forget the debt, but it's low, less than 10 billion. McCap cleanup will be over in 10 years or less. Let's see, Orsonovus, rotate into my higher conviction picks. All right. Yeah, and here Ricardo has interesting thing. So I made okay. Let's see. I went to kind of like the next phase of uranium. I made money in DNN, UROI, and UEC, then moved it to KEP. So Korean electrical company for a continuation of nuclear reactors. Still hold UEC. Nice. All right. Let's see. I think I have one of my ETFs have Cameco as a listing. I have to check. Yeah, absolutely. Now, mind you, too, even a good energy ETF will probably have it'll probably have more than just oil if it's a full-on energy ETF. So you might have Cameco in some of those as well. But we'll have to take a look. All right. This has turned into uranium chat. Welcome to uranium chat, folks. This is a chat that really glows on you. All right. Larry says, is there something you should look? It's something you should look into. Let's see. And there's two tickers and you own the Japanese ones. All right. All right. Jack says, is it worth opening an account at RBC? Just for access to the Tokyo Stock Exchange, I want to own Mitsubishi Corporation stock. Now you can get, you could definitely get some ETFs through on the TSX that will give you Japan. So, and it probably, you might have access. You'd have to go to the site and look, but let's just take a gander. Like quite literally, if you come in here and just type in Japan, we got Japan Gold, CI Japan Equity Index. Here's one right here. This is a big one. There's one here. Oh, here's another one too. Let's go to the BMO one. Yeah, we'll go to the BMO one. So BMO Japan Index. All right. So they got access to a lot of stuff, but this is not going to tell me. Let me just grab this. Let's open up a Google. We'll just drop it in here. All right. We'll allow here. Allow. All right. BMO Japan Index ETF. Here we go. Accept and continue. I want to know their holdings here. Let's take a look here. Holdings. There we go. All right. And you were looking for right here. Look at this. Mitsubishi right here. Yeah. 3.49% of this ETF. So that's one way to get access to it. And keep in mind, you get a lot more safety with an ETF because it's going to, if you got one company that does have a bad day over there in Japan, well, it's going to take care of the other ones. But going back to this ETF, how has it been doing though? That's my question, right? Let's take a look at the 3-year. No, that's not too shabby. Not too shabby at all. I had one little hiccup here in March, but mostly on the move up, so not too shabby. So that's just something to look at. A lot of people talk about the Japan lost decade, and it's kind of one of those interesting things. One of the things that people don't look at is the when Japan had before they went into this massive crash. And I wonder if I can find this. This would be, it'd be great if I had a. I doubt this here will have it. Let's try this. Let's go to 20 years. I don't know if that's it or not. No, it's definitely no. They've only, oh gosh, these guys have only been around since 2022. So no, that's not it at all. Let me just take a look here. All right, let's take a look here. I want to see. All right, Japan. Let's put this in. No, it should pull up something. All right. Yeah. I just want to. I'm gonna go to images. All right. This is what I'm looking for right here. But yeah, we'll pull this one up. It should be fine. All right. So yeah, this is the Nikkei 225, and the S&P 500's in there too. But let's see here. Where is it? All right, this one right here. So one of the things that we can see here is, all right, let's take a gander here. So the blue one, that there is the Nikkei. The red one, or the orange one, that's the S&P 500. You can sort of see that overall, they're pretty much in the same place. But here's the thing. You look at this, and this here, this is that big crash that they have not gotten. They have gotten back. They finally have broken it. They finally have caught up to this. But that is the thing. Now, one of the problems that people forget is there was a lot of economic stuff that was going on where the U.S. was basically pumping a lot of money into the Japanese economy. And that's part of what caused this giant peak. So this here peak, it's artificial. Yes, it happened. And when, all of this extra money, thanks to the US, was pouring into the Japanese economy, guess what people were doing? They were buying stocks. They were driving the market up, creating a smorgasbord. But the bubble that was created, and we're going to call it a bubble, what happens? They pop. And that's what happened. It popped. It crashed. And yeah, that's not a great time in Japan. Not a great time. But if you use this as your measuring stick and say, oh, well, this economy has been ruined until 2024. Well, you're wrong. I mean, if you look from about 2012, their economy's been doing fantastic. And you'll notice they're not that far off from the S&P 500. And why? Why? Because, well, this was all artificial. This crash, this bubble burst, all this did is, if you were to look at this, if you were to ignore this here and just sort of come this way, you could say, yeah, okay, they had a stale economy for a bit, but then, they had a nice bull market coming out of that. So it's not that bad. It's not that bad. It's just that when you do create something like this, then you get, well, let me show you. I'm going to show you now we'll use VFV for this one. Oh, actually, guys, I've got the drawing already here of the VFV from the last show. You can see that's kind of the trend that we were on. So this here is going from 2017 right here up to about 2024. So that there is the trend. Now you see this big boom. That's the one I'm talking about. This was all of that COVID support money flowing into the stock market, pushing things up, so that when that bubble burst, and in that case, that bubble bursting, you could say bear market, sure. But it was more or less the fact that everybody dumped all this money into the stock market, and then all the government support stopped. All of a sudden, you got all these people who didn't go back to work because they were getting the government supports. They no longer have jobs. They need to pay rent. They need to buy food, everything else. So what are they doing? They pull all of their money back out of the stock market, and bang, it puts everything back down to where it should have been. So in many ways, this last little bear market that we had at the end of 2021, in many ways, it was just a correction. It was just a correction, getting rid of that excess money from COVID, all of that government support money. That's all that was. It was just even itself out. So in many ways, we've been in a bull market for a very long time, like a nice steady little bull market. And now kind of, now it's been very aggressive. It's been, a lot steeper going up. And that, as I mentioned, that's one of those things that makes me think, oh boy, what if we got another one of these? Well, we don't have supports coming in. So what could be causing it? Good question. But, we could be in for a correction. That could be, it could end up being a small bear market. I'm prepared. I don't think it's going to happen right away, but I'm still prepared. I'm still preparing nonetheless. All right. Oh boy. That was a really long tangent, wasn't it? TKECY. I do not know, but let's take a look. TKECY. I have a feeling that is. Yeah, it's not. I don't got it. I don't know what it is. All right. Let's see here. Larry says, yeah, just make sure that's the Japanese one, not the American borrowed one. Don't do the ADR for TEPCO. Okay. Bismarcky says, I can't believe how far behind I am. Anyone know a company that makes tear gas? I have a feeling the stock is going to go higher. That's a good question. That's a good question. I don't know off the top of my head who makes tear gas. Let's see. I can only find TK, and it's sitting at 280 USD. Oh, okay, so Tokyo Electric Power Company. There we go. All right. Let's see here. All right. I'm going to just jump over a few little things here as you guys talk about that one little ticker. All right. Let's see here. All right. I'm going to jump all the way down here to Doorpat. Let's see. If you specifically ask it to state sources, ChatGPT does, but I am really loving Perplexity right now. Okay. Fair enough. Yeah. That's, ChatGPT gave it. Normally, it almost always gives me more sources than I'm looking for, but I do a lot by hand, though. I will admit, I'm still one of those people. Japan and China get their natural gas from Australia. I do love the Australian market. Did you hear of that tentative deal with China? Tariffs? Yes, absolutely. Actually, we just talked. You know what? You probably posted this before I talked about it, but it has been talked about. Doorpat. Let's see. Once again, I was considering a ZP. So yeah, the Japan one, but the MER is high at 0.62. All right, fair enough. Let's see. Mitsubishi Corp or Mitsubishi Heavy Industries. Let's see. Well, at least on Wealthsimple, I can't buy any Tokyo Stock Exchange. So there we go. All right. We're jumping ahead here to Andre. Who knows where to buy? All right. Andre. I have a feeling that you might be a bot. I'm thinking this. I'm thinking that you might be a bot. All right. Well, guys, I just dropped the ban stick on Andre. Whoops. But what can I say? I was feeling bottish. It was feeling very bottish at that point. All right. We'll skip over here to Mark. Let's see. I joined late, so maybe already mentioned. Wealthsimple had a live stream today introducing end of banking. They introduced credit card no fee, 2% back, line of credit, paper checked. Ooh, paper check delivery. I like that. Yeah, I need to look in. I did not get a chance to check this out, but I do need to look into that. This sounds pretty exciting. This is this is actually one of the few complaints I have about EQ Bank is that they don't have, because sometimes there are people that still want checks, believe it or not. Believe it or not. And it would be nice if you had that option with EQ Bank. But you know what? If Wealth Simple starts doing banking and they start giving the checks, and they could turn into my favorite. They could. Not, they haven't yet. I have to see everything. I have to see it all in work, in operation, of course. Ricardo, well, work time is over. Have a great afternoon, everyone, and thanks for the constructive talks. Always a pleasure to hear from all of you. Have a safe trip home, Ricardo. Larry says, let's see. I knew people that were getting $900 a week unemployment during COVID. Oh, boy. All right. Let's see. Have a good one, Ricardo. Larry says, tear gas was that Michael Burry stock from years ago. It jumped on the Trump win because of locking up of illegals. Oh, boy. All right. Oh, my God. I'm almost caught up. I can't believe it. Thoughts on CI First Asset U.S. and Canada Lifeco Income ETF holds 10 of the largest North American life insurance companies. Yeah. I mean, I don't know. What is the, let me just find it. I need the ticker. I want to take a look at it. I've looked at them before. Not just CI, and here we go. First Asset. Come on. Let's see. First Asset. Come on. CI First Asset. Healthcare Enhanced Government Bond. Guys, they need to give me more. They need to give me more. I'm just going to put in, just going to try Lifeco Income ETF. We'll see if we get it this way. Here we go. CI US and Canada Lifeco covered call. I don't think that's the one you're looking for. Give me the ticker, Life's Adventures, of the one that we're looking at. I don't think you want the covered call one, but nonetheless, one of the things, well, let's just actually take a look at this one. I don't think I've ever looked at FLI before. So this here, the CI US and Canada Lifeco covered call ETF, what are they giving for a dividend? It's not high, so 6.508. So it's probably just very simple covered calls quarterly, 17.8 cents per share. Okay, that's interesting. Let's take a look and see how they've done though. Not bad, not bad. It's at least moving up. Oh, okay, we are in the right one. FLI. All right. Great. Yeah, no, I think life insurance. I do like life insurance. I think that's fantastic. It's kind of like, it's not bad. It's not bad. Let's take a gander. I want to see one other thing here. Okay, their dividend moves around a little bit, but well, they actually have a return on equity. Sometimes you won't get a return on equity with something like this. It's not bad. I mean, if you're looking to diversify into insurance companies, this is not a bad one. I know Bank, for example, with the Evolve one, they do banks and life insurance, but they just do Canada. And they also have Power Corporation of Canada in there as well. But yeah, it's not a bad way. If you want to get if you want to get insurance across both countries. Now, one thing I will say, though, I'm going to put this out there. Having just insurance, considering we're in this situation where there's a bunch of people from NOAA being laid off, we have a very, and I mean, meteorologists are predicting a very, very bad hurricane season. There is that potential that insurance companies may be paying out a lot this year. So just keep that in mind. Now, mind you, that volatility is probably good for the covered calls. But that's always something to keep in mind. Like, you always want to be paying attention to overall economic trends. I mean, heck, even up here in Canada, we got a lot of situations with wildfires, and we thought last year was bad. This year is getting bad already. So it's almost becoming a yearly thing. So keep that in mind too. Well, mind you, a lot of the insurance companies are now changing their rules. So basically making you do a lot more to get the fire insurance if you're in one of the risk areas. So that's that's probably going to become a normal thing, I think, nonetheless. So what can I say? All right, let's see. Geo Group is then named Geo. That's a perfect name for a Geo Group. Rory says, "Oh, Quest Trade tried a fast one with me. They put 1 cent in my account when I tried to close it last week when it was officially at zero." Oh, did they really put a penny in your account? Oh, Quest Trade. What can I say? Exactly. There we go. All right, guys, if you got your last minute questions, get them in. The stream has already gone longer than they normally go. And it looks like we don't have a Friday stream, but we will be back on Sunday. On Sunday, we will have This Week, and I have a feeling, oh boy, do I ever, that we're going to have a lot of crazy news between now and then. I would really love to see more news come out on the Canadian deal, because I think that would be fantastic. And I'd also like to get an update on where we are with this one Canadian economy bill, because I think that's going to be really, really interesting. All right. Jack says, have you ever looked at Canacol Energy? Yeah, I believe, I have looked at them before, for sure. I think they've been in a list video once, or at least once. So I know the Colombian government is anti-natural gas, but their election is next year. Yeah. And that's a thing just to keep in mind, guys. I mean, when you're looking at an energy company that is operating in a foreign country, the politics of that country can absolutely come in and impact things big time. We've seen situations where gold mines had to be shut down because of some of the political stuff going on. So that's something to keep in mind. So a lot of times when you're looking at a big gold company, if they operate out of multiple jurisdictions, multiple countries, that's a little bit better, because if they have a mine in Ecuador that gets shut down, at least you got a few other countries, and it's not going to completely cripple them. So that's always something just to keep in mind. PB ratios look good, so price to book, gotta love that. Chartwell retirement residences. Yeah, I mean, let's actually pull that one up. All right, CSH. So yeah, like some of these retirement places. So as you guys know, we got Extendicare, EXE, we got SIA. I mean, they're both doing fantastic. And this one here, let's pull them up as well. This is another one. So this here is Chartwell Retirement Residences. This is a sector that is only going to get more and more business as the boomers start moving into that later retirement years, where they might need that little bit of extra help. And where the Gen Xers are kind of like, I don't want to look after them. Let's put them in that home over there. Not all Gen Xers, but I was being a little bit facetious and funny at the same time. But that's what's happening, right? A lot of folks are moving in, and these, especially ones that have extra living care and all of that, and it's going to be big. And it doesn't matter what the economy does. We could have a recession, we could have a bear market. It doesn't matter. These people, they still need these homes. So it's going to be good. It is going to be good. Pretty much anything senior care wise, it's a safe bet. It's a pretty safe bet. If we have a safe bet, it's as close as we're going to get, for sure. All right. And let's see. Yes, more and more business, just like funeral homes. Yeah. Well, that's the thing about funeral homes. I mean, people are just dying to get in there. They have a lot of customers. And that was bad. That was really bad. Ah, dear. You can tell we're at the end of the stream when the jokes get that bad. But that's okay. That's okay. All right. So, all right. Merle says, what is the opinion of owning bank ETFs? There's a lot of different options that you have. For one, you can go with just a straight up bank ETF. They're fine. They're fantastic. You're not getting into that extra risk, but banks do tend to grow. So there's that option. And then if you want to get into something where you want some income, there's a lot of covered calls. So there's a lot of resiliency into the bank. So, when you look at a bank ETF, so let's just go to a simple one here. What is it? Is it ZWB? Oh, that this one is a covered call one. Oh boy, I didn't mean to go to a covered call one. We'll go to the covered call one. We'll go to the covered call one. Why not? When we take a look at the last year, banks have been doing good, other than Liberation Day. But for the most part, banks have been doing really, really well. But you can start to see in this case here, we do have that one little event there. But this, to me, this is buying opportunity more than anything. Now, mind you, this one here is ZWB. This one is a covered call. I just want, you know what? Let's not do a covered call one. Let's, I'm just going to put in a bank ETF. And let's say U.S. banks yield. I want a regular bank income. All right. Here we go. ZEB. This is the one. I was thinking of ZEB. I don't know why I went to the other one. Here we go. ZEB. So this is the BMO equal weight banks. What I love about this, you got an equal weighting of your banks. I believe it's the big six that they hold. Now, when we look at this, you'll see it's a similar shape to before. You can get the same kind of thing, Liberation Day. But overall, now that's the 1 year. If we go to the 3 year, and you can see it's going to mirror what banks are doing. But banks have been doing fantastic for the last little while. I think there's a lot of resilience. The nice thing about banks is that, we'll go to the 15 year. And you can see when you back out, because look at this, when we're looking at that 3 year, you're looking, you say, okay, well, flat and it's up a little bit. That's not really a trend per se, but back out, right? And you can see that overall, and this is one of the things I like, is I like if you draw a straight line through this movement here, you'll see that, you go right past the pandemic and, it's very clear that we've got a nice moving up trend. Now, where would something like ZE be? Like this is a perfect one for your RRSP. It's or any growth, any place where you want to grow. Like if you're in a growth stage, this is a fantastic one. I don't think you're going to lose with this one. You will have, like I said, you'll have these moments like this, but if you're in the long haul, you're going to be fine. You'll be absolutely fine. Because look at this. If you bought this 10 years ago, $21.44, you've more than doubled. You've more than doubled your money, and that's not too shabby. Not too shabby. And plus, keep in mind, this one does have a dividend as well. So you get a monthly dividend, a big 3.793% yield. So basically 14.5 cents per share. Fantastic. Nothing wrong with that at all. All right. Jack says, for somebody who owns no ETFs and has 59% of my portfolio in 2 Google and Northland Power, what one ETF would you recommend? VFV? Yeah, there's a whole bunch. There's definitely some up there as well. VFV is a good one. So that is your, VFV, VDY, XEQT. Those are some really good ones, which will give you, because what you want is diversification, because that's right now, if you're just in Northland Power and Google, you're not getting a lot of diversification. So you want to try to get some diversification. Now, of the 3 we just mentioned, XEQT is going to give you the most diversification out of all of them, because XEQT will give you US, Canada, Australia, Europe, Asia, emerging market. So you'll get the whole works. And just to sort of show you here, let's go to XEQT, because we haven't looked at them in a little bit. All right, so here we go, the iShares Core Equity, and let's just pull up the last year, and you can sort of see. And then Trump came along, and Liberation Day, what can I say? But yeah, it's been moving up. Let's go to the 3 year, and you can see it even clearer. 5 year, there you can see the bear market, all of that. Go to the 10 year, and you can even see here's the COVID. Now, we can't go much further behind here because this is when this fund started. So XEQT, great. VFV is going to give you good S&P 500. VDY is going to give you the Canadian diversification. So all 3 definitely really, really good for sure. But do your due diligence. Don't just sort of say, oh, Candace said this one's great. Look it up. Look at the look at the past, look at what it's done. Make sure you're happy with it. Make sure it's within your own risk profile. And I always say with an ETF, don't just go to TMX, go to their website. Every one of these ETFs has its own website. So for example, and let me show you, we're going to leave Japan. All you got to do is if you go right over here to Google, so XEQT, I usually type in ETF as well and allow. And then you can go in here, and here it is, BlackRock iShares right here. You pull it up, and guess what? You got a whole page of information. Now, mind you, this is from XEQT, so you're going to probably say they're going to be biased. Well, they might be biased a little bit, but legally, they can't be that biased. There's so much law around here that pretty much means that they have to say things in a very peculiar way. I don't want to say peculiar, but specific. So you take it, just to put this on this website, those three little paragraphs, that 1, 2, 3 right there, they've been through multiple teams of lawyers, internal, external, just to make sure that there is nothing outside. Because here's the thing, if they make something sound better than it is, well, that's opening them up for lawsuits. So they're not going to do it. So for that reason, I usually will say the information that they have on their pages, I would say you could take it to the bank. They're really not that biased. They probably want to be biased. Pretty much the most they can be biased is trying to pick a nice font that works well with you. There's their biasy right there. They got font bias, but other than that, it's not too shabby at all. All right. Let's see. And thanks. You're a great streamer and give great analysis. Thanks for all the YouTube certified financial advice. I don't know if it's YouTube certified. You can call it Candace certified. There we go. All right, guys. Once again, we're at the end of another fantastic stream. I'll see you guys here on Sunday. We'll do it all over again. We'll have some fun. We'll have some fun on Sunday, I'm sure. Guys, if nobody mentioned hockey, Edmonton is in a do or die situation. I will say this right now. If Edmonton can win this game, they'll win the series. But if they lose, oh boy, I don't think they have a chance. I will, quite literally, let's award them the cup if they win tonight. It is tonight, I think. I think it's tonight. But anyway, guys, until next time. Whoops, wait a minute. I'm small. I can't go away while I'm small. I have to be big to go away. All right, guys, another fantastic stream. Thank you guys for dropping in. I will see you guys on Sunday. Take care, everyone. Bye-bye.